So, AJ, what would you do if you were in the chairman's shoes at this moment?
Well, one of the questions, and it got reported in a Reuters article. So if people get a second to take a look at, and I'm going to pull this up really quick. Let's right here and bring it up over here. So there's this Reuters article out there. This is from Tuesday, a couple of years before the Fed nears its balance sheet decline. So we've talked about this a lot in our podcast here, which is basically the Fed took on, if I go back a couple of years here, the Fed took on a huge amount of debt. Not debt, but they basically created cash, and with that cash, they bought a whole bunch of bonds. They bought treasury bonds, they bought mortgage-backed security bonds, and just recently they started buying really high quality corporate bonds. And that has created an influx of cash into the markets, mainly to the people who were selling bonds. So now the question is will that money get distributed down to the everyday folk? But then at the same time, now they're on this spree of selling those bonds and shredding the couch. They're both selling the bonds and they're allowing some of the bonds that they've had through maturity to mature, turn into cash, and they're not replacing those bonds. And all the cash that it generates, it's basically now shredding. So they're taking money out of the market through the bond market, right? And out of the economy, I should say, through the bond market. So you guys got to remember that the Fed, they have these very coarse tools to put money in and out of the markets or to slow or speed up the economy. And they have like sledgehammers. They don't have like little intricate hammers. When it comes to like distributing the cash so that all of us can kind of get a little bit of it, or when they take the cash out, that it affects us equally. That comes down to what's called fiscal policy, not monetary policy. So the Fed has nothing to do with fiscal policy. In fact, those are your elected officials, your congressmen specifically, that get together and, in theory, democratically figure out how to redistribute wealth. And I'll tell you, anything where you put like 500 people in a room and you try to get them to agree on something, usually nothing gets accomplished. And so what you see here with when you look at what the Fed has done, you realize that the people, just look around your everyday life. I don't know if you guys have even thought about visiting places like amusement parks or going to even a Chipotle. You'll notice that the price of a burrito now is not even affordable by anybody who's not really like middle to upper class or higher, right? So the way that the wealth has been distributed, the people who are kind of doing much better than the rest of the people, they're spending. They're spending at their Tiffany's. They're spending at their high-end retailers. All the high-end fashion people are doing good. They're buying cruise tickets. They're going on airplane flights. They're vacationing. They're buying high-end meals, high-end restaurants. But the little guys like Bed Bath and Beyond, who sells trinkets to just about everybody, they're not doing well. That's because people with the kind of middle to lower incomes, they're having a very hard time of it. And the scoop is we all vote. So there's a lot of angry people out there who are going to be voting, and they're not happy with what's happening with this redistribution of wealth, and maybe they don't know how to change that stuff. All to say, back to the question at hand, if I was the Fed, what would I do? I would probably, like I said earlier, realize this differentiation between sectors and more specifically between wealth groups and start to moderate my policy based on the masses and not just the overall, like I would let some of these sectors like leisure travel and professional services, I would let them run, right? I wouldn't base my monetary decisions on those hot sectors, which are probably over affecting the overall broad market indicators. I'd make sure I'm looking one level down. And so I probably would not, if I was the Fed, I'd moderate on my interest rate hikes. Maybe some quarter point rate hikes coming up, but I'd stop and I'd let the current interest rate hikes that I did last year soak into the economy. I'd probably stop. And then the second thing I'd do is I actually would keep selling the bonds and letting those bonds that mature. I think that that's a smart thing to do. I think the Fed needs to get out of the business of owning bonds.